Alright guys, what is up? How y'all doing today? So this is going to be the second video to my educational series. And today we are going to be talking about trends and what are trends and how you can spot trends and pretty much, how you can spot trends and what are trends pretty much. The first video we went over candlesticks. I don't know if you guys know what candlesticks are, but if you haven't, watch the first video. Watch the first videos on candlesticks. Each video is going to be in order from the first thing you need to learn to the next thing you need to learn. So if you're scrolling through this video and you haven't seen the previous video, then I recommend you tune into that video and watch that video. Alright, so let's get started. So a trend. So I don't know if you guys are familiar with the market, but let's just go back to the first video and how I was talking about candlesticks. So candlesticks. So a candlestick is pretty much, this is a candlestick. As we can see on the charts, one candlestick might be red, and one candlestick might be green. So remember, green means up, red means down. This is an up candle, this is a bullish candle, this is a bearish candle. Now, let's get rid of these drawings. Now, a trend. So the market basically moves on trends. So it pretty much moves on higher highs and higher lows, or it moves on lower highs and lower lows. So if this is a trend and the market is moving like this, guess what? We just created a higher high and a higher low. Higher high, higher low. Higher high, higher low. Higher high and a higher low, until the market decides that it doesn't want to make a higher high, and we make a lower low to then, we make a lower high, we make a lower high to then create a lower low, and then a lower high, lower low, lower high, lower low. So this would be the trend. This would be the trend, the lower, the downtrend, and this would be the uptrend. If this chart makes sense. So let's go through this again. So the market moves on the higher highs and higher lows. Higher high, higher low. Higher high, higher low. Higher high. Until the market doesn't want to create a higher low. It might create something like this. Whoops. We might start coming down and creating a lower low. See this? We created a higher high, boom. I mean a higher low, sorry, boom. After all these lows, we finally broke structure and created a lower low. All right, and once you see it in a real-time market, you'll understand what I'm saying. But I just want to give you guys a broad demonstration of what I'm talking about here. But this is pretty much how the market moves. We move on higher highs and higher lows. So this would be a higher low, this would be a higher low, this would be a higher low, until the market comes, creates that higher high, and then we decide to create a lower low, a low below the previous low. You guys following me? So same thing here. Higher highs, higher highs, higher highs, higher high, until we start creating a lower high. So let's take these out. So this is a higher high. We're now starting to form a lower high because this high is lower than the previous high. Before, we were on a bullish trend, we were on a uptrend. We created higher highs. Boom, high here, another high here, another high here, another high here. Pretty much we didn't want to create another higher high. We started creating a lower high. This is the lower high, and this is possibly the start of a brand new trend. If we're going to create a lower high, we're most likely going to create a lower low, which is right here, lower low. And then we'd start making the lower high, lower low, lower high, lower low, lower high, lower low. You guys getting me? Getting what I'm putting down? Alright, so let's exit out of here. So this is how the market moves. We're either going to move on lower lows and lower highs, or we're going to move on higher lows and higher highs. So this is how the market moves. Trends. We're going to name this trends. This is a trend. Alright guys, this is a trend. So now let's look at real life. Let's look at real life examples. Okay, so today, guess what we did? We created a higher high, boom, and a higher low. It can either be swing lows or it can be literal identical lows. This is a swing low when this is the lowest part of the pretty much external move. This is an external low, a swing low, external low. This could be a low right here. 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 This could be a low right here, but these are not external lows. This is a low, but it's an external low, and we call this a swing low. So this is a swing low. This is a swing high, swing high, swing high. So we can go technical or we can go swing. So there's pretty much two different types of highs, really, and two different types of lows. But pretty much, this is how the market is going to move. If we're talking swing, then we're talking like this. Oops. Swing, 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 swing. So these are pretty much swing highs. Oops. But if we're talking technical, then this is a high right here. Oops. Technical, this is a high. But this is also a high. And 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 this is also a high. So these are all highs right here. But with a swing high, this is really the only high we're talking about right here. Or right here. Or right here. You see? Swing high, there's 3 different highs. But technical highs, there's like 1, 2, 3, 4, 5, 6, 7 highs. So it's really about what type of high you're describing. That's pretty much what it is. It's what type of high you're describing. So sometimes you might have to look at the swing highs and swing lows. Sometimes you might have to look at the technical highs and technical lows. It really depends on what you're looking for throughout your market research. Trying to figure out what else I should be talking about. Yeah, we also have equal highs as well. Equal highs, sometimes we could use that. This is a good indicator that the market likes to draw into. But yeah, the market pretty much only moves in 3 different ways. I forgot to tell you guys the last way the market moves. So sometimes the market likes to move. So sometimes the market is either going higher low, higher low, or the market is going lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Or the third way is the market likes to consolidate, or it likes to go sideways, like this. This is 3 different ways that the market likes to move: up, down, or sideways. So let's talk about consolidation really quick. Consolidation, it doesn't necessarily make a higher high or a higher low. We just go sideways. It's literally what it is. It's not an uptrend, it's not a downtrend. The market is literally moving sideways. So let's look at real life examples. So real life examples. Let's see if we can find the consolidation period. Consolidation, where are you? Okay, right here. So this is a perfect example of consolidation. So you see how we're pretty much just in a box. We're not really making higher highs or higher lows. We're just chopping around in the same range. This is consolidation. Sometimes this is how the market likes to move. It's not going down or it's not going up. We're just going sideways. All right? So that's pretty much what it is. We're not necessarily making a higher high for a higher or a higher low. We're not making a lower low or a lower high. We're just literally going sideways. So that's literally what that is. Consolidation. We're literally going sideways. All right. All right. I think that wraps this video up. So your homework is to label out 10 different uptrends, 10 different downtrends, and label out 15 different consolidation periods. Put them in a box. You see this box right here? Put them in a box. If you can't find the box, you got to go here. It's called rectangle. It's in shapes. So box it out, label it out, and label out the consolidation at least, and then try to draw an uptrend. This is an uptrend. Figure out where the next uptrend is. All right, downtrend. Draw your downtrends out. Draw 10 of them. I need 10 downtrends, 10 uptrends, and box out your consolidations. All right. That's the end of this video.